Hey guys, welcome back to another weekend edition of The Trading Edge. I'm super excited about this weekend, not just because we have a bunch to look at in the markets this week. I have about 13 pairs / commodities that are on my radar and a very, very busy news week ahead. So a lot to get into, but sports are back, right? Stanley Cup Finals, NBA Championship, Champions League Final tomorrow or today, depending on when you're watching this video. As a sports nerd, I am in heaven. So very excited. By the way, if you're joining me for the first time, my name is Akil Stokes. I am a former struggling trader turned consistently profitable trader. I am also, I then went into money management. I then went into trading education. And I'm one of the co-founders of Tier 1 Trading.com, which was recognized in Forbes magazine as being the leader in trading education, which is pretty awesome. This is a Trading Edge video, something that we do for our members on the site multiple times a week. And on the weekend, I do 2 versions of this video. So if you are a Tier 1 Premium member or if you are a trial member, you're going to have access to the full edition of this Trading Edge video. So all 13 pairs, a look at the news. We may do a little recap of how my trading has been throughout the month of May as well, since we just ended the month. And if you're watching on YouTube, you're going to get what I consider to be not necessarily my trade of the week, but the trading opportunity that I feel to be the most valuable, meaning from an educational standpoint, will give you value for your time spent watching this. So lots of stuff to look at. So let's hop into the video again. Premium members, trial members, you guys watching the full recording. We're going to start off by taking a look at the news because, again, there is a lot to look at. And if you're watching here on YouTube, we're going to hop right into the first pair after you do 3 things for me. Those 3 things are: 1, hit that like button; 2, subscribe if you're new; and 3, share this on social media. I love doing this video. It motivates me to do it even more when you guys promote it for me. That way we can reach more and more people. So do me a favor, do those 3 things: like, subscribe if you're new, and share. And also head over to tier1trading.com. We have some brand new free content up on the website. We have the Ascension webinar, which is awesome. We have the Trade to Measure workshop, which is amazing. All those are available to you for free. So head over to www.tier1trading.com and check it out. All right, let's get into things. But certainly a few things you want to write down as you start to schedule out your trading week. Now, let's get started on the euro dollar. Euro dollar has been interesting. It's been a great pair for predictions, not so much a great pair for trading opportunities for me. I've had 0 trades this week, but we've pretty much pinpointed what the euro dollar has done. And if you guys missed it, it may turn into a podcast episode, but I think it was on Thursday's live room. We did a great speech, a great lesson on just the power of making predictions and how the difference between the professional mindset and the newbie trader mindset, where basically being process versus results driven, where the newer trader is all about results. It isn't a positive unless I get positive results, where the seasoned vet or the trader with the growth mindset, instead of just that fixed mindset, they're worried about the little things. What are the little, small, minute actions, right? Kaizen philosophy, continuous improvement. What are the small actions that I'm taking that are going to allow me to become a better trader in the future? And we talked about making predictions, even if it's not on a pair you trade, even if it's on some random pair on a random time frame. Practicing making predictions, it allows you to be a better technician. It allows you to grow confidence in yourself as a trader. 2 things, oh, I'm crossing my fingers. 2 things that are needed to be consistently profitable in these markets. So before we get on to what's on my radar, I'll just give you a recap of what we looked at in case you didn't see the live room recordings. But we started off the week looking at essentially a head and shoulders top right here. Price action had rallied up. We made this classic reversal pattern. We were looking for a break of this line, and it continued lower. We got that continued lower right to this white box. where we got a double bottom action down there. We did get a little bit of a false breakout here on Thursday. This is what took away any opportunity of getting long, right? And that's just a rules-based thing, right? Lower low, lower close. I know what that means. I know what it tells me. I know what it, in this case, doesn't allow me to do. So that kind of scrapped any trading opportunities. This ended up being a false break. We crossed the midway point of this consolidation, which if you guys remember from Thursday, that dealing with the 50% level is that midway point, sign of a false break. And then we rallied up. So good move, good prediction, tap yourself on the back. Now the question is, what's next? And something that's going to be on the radar is going to be a potential advanced pattern formation. We haven't talked about patterns a lot here recently, although they've been making a killing. Have you guys seen the Aussie yen real quick? It's funny, I did a video probably a couple months ago called Pattern Trading Ain't Dead, right? Look at this Aussie yen. Again, just boom, 1, 2, 3 patterns back to back to back. I shared this on the Twitter, and we got we had traders shooting us left and right of some of the back testing they're doing, and the amount of kind of back to back patterns they find during that consolidation, which is pretty cool. But going back to the euro dollar, what we're looking at here is a potential advanced pattern formation, right? And this is going to be one that takes an anchor leg versus an impulse leg. As far as anchor leg versus impulse leg, they're both valid to me. It doesn't matter which one you use. And basically, those are terms for you guys that are new of defining that X to A move. It doesn't really make a difference for pattern trading. It does make a difference as far as just structure and price action and trend recognition. But the first thing we're looking for is an impulsive move down, right? So a move on your chart that stands out. And I ask you guys, look at this chart. Are there any moves that stand out? Right? Look at our swings in the market. As the market ebbs and flows as much as it does within consolidation, are there any swings that stand out to you? Swing lows to swing highs to swing lows. You always want to start with the ones that pop out to you. If you have to force it, that's probably a good sign that you're forcing a pattern. My opinion, when in doubt, stay out. But one move that stands out to me, as I bring my pattern recognition tool on here, is going to be this swing high right here at 112.63. to this swing low right here, right? A nice move down. And that's going to be that's going to be the initial move that we're looking for in our pattern formation. It's called an X to A leg. We then want to see a retracement, right? And obviously the move back up is going to be our retracement. This is going to be our A to B. Now, depending on what level this retracement hits, this is going to set up what type of pattern formation I'm looking at and what we're looking for. And when I first started trading, I literally, don't have any shame, do this, guys. I literally had the rules for different patterns printed out and taped to the back of my the wall behind my monitor. I had one monitor at the time. I had two monitors, right? Big balling. And I had it in the back, and I would literally go through one at a time, right? It would be rules. Okay, rule number 1, find X to A. And I go in my chart. X to A, okay. Rule number 2, find A to B. Okay, found that A to B. Then I would ask myself, what type of Fibonacci retracement do I have? In this case, I have it comes to a 69.1. By the way, for you guys that are asking, this is one of our pattern recognition softwares. If you want to try it out, go ahead and check out the free, not the free trial, the $1 14-day trial that we have on our website. It's risk-free. That means there's no auto bill. I know a lot of places you kind of get sucked into it. This one, after 14 days, your trial is just gone, poof, you lose access to everything. But you get 14 days of trying out the software, trying out a training course, getting involved on the community chat, and basically trying out all the educational services that we have to offer aside from the premium courses. So it's pretty cool, and it's $1. But I look at this and I see, okay, we came to a 69.1 level. So then I look at my thing, okay, 69.1, okay, cipher pattern, these are the rules. Bat pattern, these are the rules. Gartley pattern, if we come to 618, be on alert for Gartley, okay, what's the other qualifier? Cannot break above 786, okay, did we break above 786? No. So now I know to be on alert for a Gartley pattern. And again, if you have this software, it kind of tells it for you. And then we look for our next move, which is going to be our C leg, and we would project where is our decompletion going to be. And you can see our decompletion in this case this is going to be a bearish Gartley, so you would be looking to sell. It's going to be at 112.44s. 112.44s. And I know that the zone between 112.44s and the high of my X leg right here, about 112.63, this is going to be my kill zone. This is going to be the zone in which I look for a potential reversal. Now, how you want to trade this is up to you. I trade these pattern formations aggressively. I can care less about any type of confirmation in this zone. For me, these pattern formations are so important. They're so strong that I just want to be involved in the move because I know a lot of them happen quick. But I also know a lot of traders, many that I've worked with closely, that take a different approach where they use kind of that if-then syntax that we talk when it goes to creating a rules-based trading strategy where if price action enters the kill zone, then I look for confirmation. And that confirmation is obviously, based on whatever techniques they want to use, an RSI, a candlestick formation, a simple pattern formation, whatever it may be. But they look for a little bit of confirmation in that zone just to really be sure that it's a high probability opportunity instead of just a regular one. Pros and cons to each. Obviously, the more confirmation you wait for, I guess you can say that the less losing trades, I'm about to say bad trades, but it's a good trade no matter what if you meet your rules, the less losing trades they involve themselves in. But you're also going to miss those ones where price action, again, comes up, reverses right on a dime. We know that good moves don't last, and reverses without giving you confirmation. You're gonna miss those. It also requires a lot more active time in front of your chart. Something I like about advanced pattern formations, right, is that it gives me, I don't have to be a slave to my chart, especially with my swing trading, right? One of the reasons I got involved in trading, the main reason, obviously I want to make a lot of money. Yes, I think we all want to do that. But the main reason was I wanted to create freedom of time, right? I saw trading as something that I can do where I didn't really need a lot of time investment. I can come in, I can spend a half an hour doing my analysis, I can set up and know all of the opportunities that are on my radar, and I can place those opportunities and then go off and do whatever I wanted during the day. A cool thing about taking this aggressively is that once I recognize this, and you can see, we're nowhere near it yet, but I can literally put orders on for this pair right now. Right? I can put orders on and have the peace of mind that if price action rallies up to that zone, it's going to fill that position, and I don't actively have to be sitting in front of my chart waiting for it. I can be away doing something. I can set an alert on my phone. I obviously have to come in and manage it. I have to make sure that the pattern information hasn't been invalidated. I have to make sure stops and targets are all in place like that. But very limited time spent because I know that my orders are on. Once price action hits a specific price point, I'm in the trade. I don't have to sit there and watch it and wait for confirmation that may never come and end up, I don't want to say wasting, because you're not wasting it, you're investing time, but I'd rather use that time for something else. So I prefer to trade it aggressively, but there's no wrong or right way. The only wrong or right way is the way that works for you. But you can see a pretty decent trading opportunity here. It's not a very shallow Gartley, which is good. You see the risk reward is going to be pretty decent. It's about a 1.3 to 1 risk reward to target one. So risking about 40 pips if you're using, say, an ATR based stop to gain about 52. So a little bit more than a 1-to-1 risk reward on here. Could be better, could be worse, but this is a pattern formation that is on my radar. There were a few bigger ones as well, but this one's far enough away that we'll just stick with this for this week. And if we end up violating this pattern or pushing higher above this level, then we'll start eyeballing the next opportunity. Real quick, I still do have an overall bearish bias on the euro dollar. I don't see this. The market has shown me nothing to be aggressive with my target taking based on this pattern formation. So something we'll often do is that if we can get a trade entry that is in line with our IPDE, right? We do a 4-step process called IPDE, identify, predict, decide, execute, where we basically create a bias about the market. I think it's going to do this, right? So in this case, right, if I think the market's going to go lower, I could use this as an entry reason into a longer term trade where I hold either the entire trade or a partial position for an extended target lower and try to really get the most out of it. That's that home run trade I talked about earlier in the video. This isn't one of those scenarios because, again, there's nothing in the market that says we're likely to go lower than higher. Again, my bias is bearish, but recent price action, there's nothing that showed that. At least not enough for me to forego a safer profit target for an aggressive profit target that, in my opinion, has a much less likelihood of being hit, right? I don't really care about getting the super big trades. I kind of want to get my money and get out. That's how I get down. I'll save those aggressive trades for the really, really, really grade A setups. So pretty cool opportunity here on Euro Dollar. All right, so I hope you guys enjoyed that video. And before you leave, do me a favor, hit that like button, share this on social media, subscribe if you're new, and leave me a comment letting me know what you think. Even if it's just, hey, good job, Akil, that is fine. Or if you have a question about something that we talked about in this video, I do go through each and every comment. Many of the traders I work with go through the comments as well. So there's a lot of support here on this YouTube channel, especially for you guys that are aspiring traders. And don't worry about being shy. We don't have any trolls that follow us. So if you ask a quote unquote dumb or newbie question, you're not going to get made fun of. You're actually going to get the help that you need. That's something that I'm very proud about this YouTube channel. Is over the years we've kind of, it's not me, but it's the community, we've been able to kind of push those trolls aside so they no longer show up and make it a troll feasting zone. They go to other places, and we've created a very professional environment here on YouTube, which is awesome. So I appreciate you guys joining me. I hope you have a great trading week. Of course, make sure you head over to the site www.tier1trading.com. Check out the free webinar, check out the free workshop, take some time this weekend to become a better trader, and I'll see you guys next week with another edition of The Trading Edge.